How to fill out your W-4 if you're single and you have a 401k. Now what I'm gonna do is I'm gonna do it single. I'm gonna go all the way to the end. Then I'm gonna show the difference that adding a 401k makes, so that way you'll have an understanding of the benefits of using a 401k with your job and how it can affect you from a tax standpoint. That being said, let's dive in. So where we are is the irs.gov. This is where you can access your W-4. You do not have to go through your HR department, your job. It's a public document. You can access it directly here. This estimator tool that we're about to use allows you to get a true example of how it all works, so you're not caught off guard. You have an understanding of what your tax situation will be in the upcoming year. So that being said, once you're on this site, you can scroll down. There's a couple of different ways to access the tools, but what I'll do is just access it in the fastest way that I know how, and that's going down to tools and application, and you'll see this carousel with all of those 10 dots. Well, I know it's towards the end, so let me scroll in the opposite direction and access the tool here. Tax withholding estimator. Make sure you have the right amount of tax withheld from your paycheck. So you'll do the click there and it says check withholding. So tax withholding estimator, this is the tool. I give you an overview of how it works, then we'll dive straight in. So use this tool to estimate the federal income tax you want your employer to withhold from your paycheck. The key word is you, because they're telling you to use the tool to estimate the federal income tax that you want your employer to withhold from your paycheck. So it's up to you. It's your choice. You have the power, not the HR department, anyone else. That being said, that's considered to be the tax withholding. Whatever amount is taken out based on what you decide you want your employer to take out. So see how your withholding affects your refund, take home pay, and taxes due. So how it works. Use this tool to estimate your federal income tax withholding. Number two, see how your refund, take home pay, or tax due are affected by withholding amount. And choose an estimated withholding amount that works for you. Keyword you. Results are as accurate as the information you enter. So make sure you enter information that's accurate. Don't just, finagle the numbers, because otherwise it's going to give you a fabricated number that, is not going to line up with you from a tax standpoint. So what you need, have this ready. You want to have your most recent paycheck stub from all your jobs if you have multiple. In this case, I'm going to use a person who's single that have one job. And if you have a spouse, then you want to have their information as well, because, of course, if you're filing together, that affects your taxes. Other income info. So if you got a side job, side business, side hustle, which that's going to be an upcoming video that I do as well, then you'll want to put that in here as well. And then most recent tax return. This is good to have, not always necessary, especially if you're single, but most of the time it's good because it, reminds you on whether or not you use or qualify for the earned income credit, if you did the child tax credit. So it's different things on there that could benefit you by having your tax return handy. Now, your information isn't saved. A lot of people think that when they fill this out, then they're done and they filled it out and submitted. No, this is not connected to your job, not connected to your website. They're not asking you any personal information. You're not even putting in your name. You're not even putting anything in other than numbers. That's it. So you use this, and then towards the end, you'll be able to print it off. Once you're able to print it off, you're able to turn it in to your employer and go from there. So don't use this tool if you have non-resident alien status, or if your tax situation is super duper complex. But for most people, it can fit your scenario. Use the tax withholding estimator. That's where you click to get access to the actual estimator tool, and it takes you here. Step 1 of 6, about you. So use your best estimates for the year ahead to determine how to complete Form W-4 or W-4P, so you don't have too much or too little federal income tax withheld. W-4, you all know what that is. The W-4P is W-4 pension. For those of you who no longer are working at a particular job and they're paying you in the form of a pension, that pension is likely still being taxed. You too can adjust your W-4 and then turn it into your pension program and have them to take less taxes out, so you're not, overpaying in taxes. So the W-4 form and the W-4P are pretty much interchangeably. It's just one is the pension, one is basically active income. So information about you. Select the information that best describe how you anticipate filing your 2025 tax return. All fields marked with an asterisk are required. What filing status will you use for your tax return? Now, I want you to look to the side. It's an asterisk there, so it's required. But then you also see a question mark. Anytime you click a question mark, it elaborates on that subject matter. So if you are in doubt, click the question mark and see if it answers whatever question you may have. And here they talk about 2 filing statuses that don't matter for this example, but they break down head of household and qualifying widower. We won't dive into that right now. We'll stick to the topic at hand. So single is what I'm addressing in this video, so I'm going to click single. Then they ask, do you or will you have a job or a pension that regularly withholds federal income taxes from your paycheck or pension payments? Yes, because that's the purpose of filling this out. We plan to have a job that's regularly withholding federal income tax. But again, there's that question mark. It talks about periodic paychecks or payments or federal withholding. If you're an employee, your employer probably withholds income tax from your paycheck and pays it into the IRS in your name. So it's basically letting you know that you fit the description of someone who is regularly having things or, taxes withheld from their paycheck. Then it asks, select any that apply. I plan to claim dependents on my return. I'll be 65, blind, can be claimed as a dependent on someone else's return. Neither of these apply, but you see the question marks beside the one so you can see if it applies to you. From here, we're just going to hit next, and then it takes us to step 2, which is the income and withholding section. Enter information for each job and pension you will receive income from this year. To use this tool, you need to have a job or a pension subject to tax withholding. If you have a Social Security income, then you prefer to have tax withheld from your job or pension to cover the additional income, select 2 or more sources of income. So if you're reporting multiple incomes, you'll select 2. If you have Social Security income and you prefer to have tax withheld from your job to cover additional income, because more income equals more taxes in most cases, or higher tax bracket in some cases, then they want you to put 2 jobs. That doesn't apply to this video, but I just wanted to elaborate since I read it. How many jobs will you have this year in which federal income tax is regularly withheld? Include this year's past, present, and expected future jobs. The first one has been added for you. We're going to keep it at 1 because that's all this person has. Your first income source. Describe this income source. So they have a few different income sources, and then that question mark lets you know which income or the description of each income source. Salary job is generally when you get paid the same amount of money every pay period, regardless of the number of hours you work. If you have a salary job, hourly job, which is what most people have, you're paid on an hourly wage, so your income could vary by the number of hours you work in a pay period. So that being said, that's the one we're going to select, an hourly job. Then it asks, select what best describes when you earn income from this job. We plan to earn all year, from January 1st to December 31st. If your scenario is different to where you've already had a job and you're no longer working there, then, you will fill it out differently. If you currently have a job but you don't plan on being there all year, then you will select, I currently hold this job but only for a portion of the year. Or if you had the job earlier, like I mentioned, you can click there. I do not hold this job yet. I expect to start the job later this year. In that case, we would recommend waiting until you actually have a check stub. But they have that option available there. How frequently are you paid? Weekly, every 2 weeks, twice, monthly. In this case, I'm going to do twice monthly. Usually I do the every 2 weeks, but let's switch it up. Twice monthly. It's a difference between every 2 weeks and twice monthly. Every 2 weeks is I get paid every other Thursday, every other Friday. Twice monthly is I get paid on the 1st and the 15th. So that's a difference, or the 5th and the 20th. So that's twice monthly. You hit that question mark, it elaborates. But in this example, we'll leave it at that. Using your most recent pay stub, when did your most recent pay period end? Then they have a calendar date to, determine when your most recent pay period ended. Now, we are in the month of February. So let's put the information in. The most recent pay period ended. Let's say that it ended on the most recent pay period ended on the 31st, January 31st. What was your most recent pay date? This person gets paid twice monthly. They get paid on the 1st and the 15th. So their most recent pay date was the 1st. They probably got paid earlier on their Friday, but let's just keep it, what it is and say the 1st. So it's February 1st when they actually got paid. Select the option that best describes your current situation. Last paycheck was a good representation of how much I earn on the average per pay period. We'll select yes on that one. And then it says my paychecks vary from week to week. Averaging 2 to 3 paychecks will provide a more accurate picture of how much I make. So if that's you, you fill it in accordingly, but we'll just say that it's a good representation of how much that person earns. Enter wages per pay period. We're going to say per pay period, this person earns $2,000 per pay period. Enter wages earned year to date. Now, if they got paid on February 1st, then how many paychecks have they received? So they got paid January 1st, then they got paid January 15th, then they got paid February 1st. So that's 3 paychecks. So year to date would be 3 times their normal paycheck amount. So in this case, we're going to put 6,000. because they get paid $2,000 every time they get paid. They've been paid 3 times, $2,000 times 3, $6,000. Based on the information provided, it looks like your total income from the job this year will be $46,000. Is that correct? Yes. If it's not, then you'll say no and adjust accordingly. Enter federal taxes paid per pay period. In this case, we're going to say that this person is taxed $200 per pay period. Enter federal taxes paid year to date. Again, year to date is going to be a accumulation of all of the taxes at that particular time. They've been paid 3 times. They've been taxed 3 times. $200 times 3. We're looking at $600 that they've been taxed year to date. Select any type or any that apply for this job. I contribute to a 401k. Do not include contributions to a Roth 401k. Contribute to a health insurance plan. Getting a bonus. Got a bonus. None of the above. Now, for now, is none of the above. However, we're going to go back and put in a 401k because I want you to see the difference that adding a 401k can make. So we'll leave it blank for now. I just want to get to the finish line, then double back so you can see the difference of adding a 401k. And even if you're not single in this situation, this could probably help you no matter what your filing status is, so that way you can see the benefits of the 401k, etc. Other sources of income. We're not going to put any additional sources of income, but you see the ones they have: self-employment, investment income, unemployment, so other sources of income, none of the above. We'll leave that at none of the above. Withholding and estimated tax payments on other sources of income. Withholding from other sources of income, so we don't have any other sources of income, so we're not withholding any no estimated tax payments, none of that. So we'll hit next and go to step 3, adjustments to income. Now we're keeping everything else the same, so pretty much I'm just going to be skipping through all of this because we don't have any adjustments. We're not doing anything other than being single, and then going back to show you what it looks like to add a 401k. So adjustment entered, $0. Step 4, standard or itemized deduction. Now, your standard deduction is based on your filing status. So if you file single, it's a certain standard deduction associated with that. If you're head of household, it's different. If you're married, it's different. So based on this person, they will have a $15,000 tax or standard deduction. But I'll read it just for clarity purposes. Standard or itemized deductions reduce the amount of income subject to tax. Most people take the standard deduction, but you may be itemizing your deduction if you have a mortgage, large gifts to charity, or large medical expenses. Your standard deduction amount is calculated to be $15,000. So that's $15,000 is the standard deduction for a person who's single. So that's what that represents. We will just choose the standard deduction and not itemize. If you are itemizing, it does need to be more than the standard deduction in order to be relevant, in order to be beneficial to you. Otherwise, you just go with the standard deduction. You have to know your situation. But for this, no, just use the standard deduction. Step 5, tax credits. So we're not putting any tax credits in. It says tax credits are the amounts you subtract directly from your tax obligation. Tax credits are powerful, and they help you lower your tax liability. But they ask, how old would you be at January 1st of next year? Let's say this person is single, and January 1st of next year, they'll be 30. So they're 29 right now, but next year they'll be 30. Let's just say that. And then from here, it has different things that could be potential tax credit: child and dependent, foreign tax, educational, retirement, homeowner, elderly, business, alternative, energy efficient vehicle. So if you got an electric vehicle, I'll do a video on that and how to fill out the W-4 if you have a Tesla or some other electric vehicle. That being said, I'll leave all of these things blank and go to the next screen, which is the final screen that gives the results. So basically, it lets you know based on what you've entered, this is your result. Based on the information you entered, you're withholding more tax than you need to from your paycheck. So they're basically saying you're overpaying a little bit in taxes. So how much are they overpaying? The expected tax withholding, if nothing else changes and you just pay $200 in every single paycheck, you're going to end up at the end of the year paying in $4,800 when you do the math. When you do the math, they're going to pay in $4,800 when they factor in getting paid twice a month. That's 24 paychecks. 24 times $200 is the $4,800. That's where that came from. Anticipated tax obligation. The obligation based on their filing status is $3,485. So that's the amount that they're supposed to pay in technically, but they're going to end up paying $4,800, which means that their projected refund is going to be $1,000, $315. So if a person gets a refund in this situation, it's just based on the fact that they overpaid, nothing else. They just overpaid in taxes. It's not anyone did them a favor when they filed their taxes. No, they just overpaid in taxes. And a lot of times people who have their taxes prepared, they feel as though their tax preparer did them a favor. No, this is why I start pointing people in the direction of getting access to our tax experts. That link will be available in the comments if you want tax experts that don't price gouge and can help educate you and maximize your refund legally. That's a whole nother conversation. But the projected refund for this person is $1,315 just based on their situation if nothing changes. Right here it tells you to increase your take-home pay, submit a new form to your employer provided with the changes suggested. So they're telling you what to do if you want to submit a new W-4 and increase your take-home pay. So you getting more money instead of overpaying in taxes. It's telling you how to adjust it. So it says how to adjust your withholding on form W-4. You can download a pre-filled W-4 to where it's already filled out. All you have to do is put in your name and specific details and then turn it into your employer. Or you can just have, if you already have one handy, you can fill it out based on this information. So it lets you know, enter your personal information, select single, multiple jobs, leave that blank, claim dependents, enter 260 on step 3 to claim dependents. What this does is say that, okay, I want to get that money back into my paycheck. So you're putting that numerical value in there so you can give yourself a pay raise. And we understand that if you give yourself a pay raise, it gives you the ability to take that extra money that you would have been overpaying to pay down debt. You can invest, you can do all kind of things. So that strategy is a powerful strategy. You know, we'll link to that as well if you want to benefit on a high level with that strategy and keep more of your money legally. But in this example, it's just showing, hey, put 260 on that line. Leave everything else blank, sign and date it. Now, let's go back and put in what it looks like if you have a 401k. This is pretty much, straight to the point. You can download it pre-filled out, but they also elaborate on how to fill it out for yourself. But let's go to the section where they talked about the 401k. I believe that was on step 2. So let's see what changes. Say, for example, this person is single and they pay into their 401k. Right here. Select any that apply. I contribute to a 401k. Now, let's see what changes, because some people do pay into their 401k because their company does a match, whatever the case may be. So let's say that they're paying into their 401k $100 every pay period, which means that year to date, since they've been paid 3 times, then they paid into their 401k 3 times. So 3 times 100, naturally, $300 year to date. Now, let's see what has changed. I did nothing else. That's all I changed. Now I'm going to jump to the results page and see how that changes by me paying $100 every time I get paid. So when you do the math on it, if they get paid 24 times throughout the year, they would have paid $2,400 to their 401k. Let's see how that changes things. So let's jump to the results page. It's going to automatically calculate some things, and it says your result. Based on the information you entered, you're withholding more tax than you need to from your paycheck. So the expected tax withholding is $4,800, anticipated tax obligation $3,197, and the projected refund is $1,603. So it went up a few $100s, which lets you know that you put money into your 401k lowers your tax liability and puts more money into your pocket. So it allowed you to get a larger refund. So let's say you turned in the previous W-4 and they no longer started taking taxes out of your check. So I think the original refund was like, I should have wrote it down, but it was like $1,300. Let's just say $1,300 to keep it simple. Say you started getting that money back into your paycheck. Now what happens is, if you're still paying into your 401k, you would still end up getting a $300 refund. So that's a way that can position you to get yourself a pay raise, but still get something at the end of the year. So that way you're not caught owing or not getting anything if that's something you choose to do. There are other ways to do it as well when it comes to like business deductions, tax deductions, but I don't want to go too deep because this video is already, longer than I anticipated. But I believe we covered a lot of ground and got you to a point to where you understand how to do it single and you understand the difference that a 401k can make. So the things down here changed as well. It lets you know, hey, download pre-filled out W-4. It'll have your new information in here, but also it lets you know what to change. Right here, this number changed as well. Instead of you putting in, I believe it was 268, give or take, something like that, it's saying put in 318. So these numbers, these monetary values can offset your tax liability. And if you do it the right way, then you can position yourself to leverage this tool and build wealth. I always say the W-4 form is a wealth form when used correctly, when you partner it with our strategy known as income shifting. And I'll link that below, as well as the tax experts that you can get access to. But nonetheless, hopefully you got some value from this video. Stay tuned. Let me know in the comments what W-4 examples you would like to see. That way we can cover it. And if this fits your situation, then perfect, you're good to go. But if it doesn't, we have more coming, so be on the lookout. Mr. Smith signing out. Salute.